So what are closing costs? Who pays them? And how much do they actually cost? In today's video, we're gonna find out. Whenever you buy real estate, there are closing costs associated with both the buying and the selling side. And just so you know, closing costs are always negotiable. Talk to your local real estate agent and they'll explain what I mean. In today's video, I'm going to be showing you a closing statement from a property that I closed recently to give you an idea of kind of money that you should anticipate when you're looking to buy a house. Let's get started. All right, so what I want to do now is walk you through an actual real life closing document. This is a house that I closed in the past, and so when you're done with this, you're gonna be able to understand, okay, so if I wanna pay X amount for a house, what can I hypothetically expect to have to bring at closing? So what I have in front of you here is an actual real life closing statement from a deal that I did in the past. And I just want you to see this to help you understand when you go to buy a house that there's more to buying a house than just that sticker price that you see on Zillow. So let's break this down to help you understand what these numbers look like. So what we have here is we have two lines. We have a debit line and we have a credit line. What's gonna happen is the debit line, these are all debits that the borrower is going to have to pay, and the credits are what's applied to the actual mortgage. And then what we do at the end is we take the debits minus the credits, and this will actually give us the actual final number that the borrower then has to bring to closing. So let's break this down line by line. The first item that we have here is the sale price of the property. In this case, the house sold for $199,900. Now, this doesn't mean that this was the actual listing price. This was the agreed upon price between the borrower and the seller. Next, we have the loan amount. As you can see, this is a credit on the right-hand side. This doesn't mean that the borrower is then getting credited for $191,000. No, this is just taking the actual down payment away from the sale price of the property to give us an idea of what the actual borrower is bringing for their down payment. In this case, if you subtract these two numbers, borrower is then bringing as their down payment $8,706. The next line items are the taxes. Now, taxes are divvied up twice a year. When you're going to buy a house, we never really know where we're going to fall in the calendar year. So as you get closer to closing, the title company will be able to figure out exactly where you fall in the calendar year so they can figure out whether it's going to be a debit or a credit to the borrower. In this case, both the summer and the winter bill were then credits back to the borrower's escrow account. And the summer bill happened to be $232.44, and then the winter bill is $455.70. Next on our list is the origination fees. And this is a very interesting situation because we actually get to see here discount points. Oftentimes when you're buying a house, if you have extra money, what you can do if you are not comfortable with your actual interest rate is you can actually pay to actually get your loan discounted a certain percentage. In this case, this borrower paid an extra $1,332.62 to adjust the loan by 0.697%. So they wanted to drop the interest rate ever so slightly, so they paid extra money to do that. Next, we have our processing fee and our underwriting fee. And what these are is the processing fee is the fee that the lender actually charges to do the file. And then the underwriting fee is what the lender actually gets paid. There is no typical industry standard for how much a lender gets paid, but it's usually anywhere from 0.5 to 1% of the actual loan amount. Next, we have our appraisal fee. Anytime that you're taking out a mortgage on a house, you have to pay for an appraiser. And it's roughly about $500 to $700. Somewhere in that price range, depending on the state that you're in, it could be a little bit different. But in this case, it happened to be $725. Also keep in mind that if the appraiser has to go back out to the house, say there was something wrong, then you're gonna have to pay an extra fee for that too, and that could range anywhere from $120 to $150. Next is the credit report. Whenever you buy a house, a lender has to pull credit to ensure that you are capable of buying this house according to their guidelines. So there is a fee to that. In this case, it was $75.80. Next on our list is mortgage insurance premium. Anytime that you're going to apply for an FHA loan, understand there's always going to be mortgage insurance premium. And this is just to protect the lender in the event that the borrower defaults on the loan. Now, the FHA loan, this is the only loan that this is required on. Make sure that you understand that if you're going to take out an FHA loan, it's roughly 1.75% of the total loan is what you're going to have to pay for mortgage insurance premium. And luckily for you, you can actually wrap this into your mortgage. It's not like a payment that you have to make exactly up front. If you want to roll it into your mortgage payment, you can. Next on our list is prepaid interest. So this next one's very interesting. Whenever you close on a house, interest is paid in what's called arrears. So if you bought a house in, we'll say, January, you're going to pay interest for the month of December. And so what this line item is saying is that the house was bought on the 28th of May, and so they're going to have to pay arrears interest up until the first of the month, up until June. So they owe $32.74 for the 4 remaining days in May, which totals $130.95. Just remember, buying a house, your interest that you pay is for the previous month, because they don't know what the future is going to be. They only know what the past is. You always pay in the past. Make sense? Next on our list are impounds, also known as prepaids. These are upfront costs the buyer pays to cover future expenses, things such as homeowners insurance and property taxes. Now, what the lender is going to do, and again, this is going to vary state by state, is they're going to allocate a certain amount of months of payments, and they're going to put them in what's called an escrow account. An escrow account is nothing more than a savings account for you. So in this case, the lender took out 3 months of homeowners insurance, quoted at $139 a month, which equaled $417. Next, they took out 8 months of property taxes at $94.29 for a total of $754.32. And then lastly, the city has their own property tax. They took out 13 months at $48.10, which comes to $625.30. Well, let's hold on here. Now you're probably asking yourself, well, what's this next number, this $938.03, this aggregate adjustment to the actual mortgage company? Now, what an aggregate adjustment is, now by law, the lender can only hold a certain amount of money in an escrow account, typically 1/6. So what they do is they take all these numbers that we just calculated, they put it into a formula, and at the end, if there's a credit that's due back to the borrower, it then comes back as an aggregate adjustment. In this case, $938.03 was then credited back to the borrower because they can't hold all of this money. Next on our list are some title company fees. When you buy a house, you're going to get a chain of title. And this is all the information that is on public record for this particular property. And the title company, they're the ones that goes out and pulls this information and supplies it to you as the borrower, and it comes at a cost. In this case, $50. When it comes time to closing, the title company is going to send a processor out there to actually close the deal, and there's a cost for that as well. In this case, $375. After they close on the property, they're going to then send the package. If you decided that you want to have all the paperwork sent out to you in the mail, they're going to charge a fee for that too. In this case, an overnight delivery of $29. I bet it's never crossed your mind that when you buy a house that you actually have to pay protection on that loan. Well, this next item on the list is exactly that. As a borrower, you need to understand that you also have to pay for protection of that loan, and you do that through a lender's title insurance. And this is to protect the lender in the event something ever comes up on the title. When you sell a house, you have to pay for title insurance to transfer the deed over to the borrower, and as a borrower, you have to pay for protection for the lender. After everything is said and done and you've closed on the property, the title company is also going to have a fee to record the documents. In this case, it came to $39. Whenever you use a real estate agent in a transaction, understand that more than likely they're going to have an administration documentation storage fee. Every brokerage is different. In this case, it was $350. Now, also keep in mind that there may come a situation where you have to pay for your buyer agency fee, and if you did, that fee would also be here under commissions. But how this deal worked is the seller was willing to pay for the buyer agent, so the buyer didn't have to. This next item that we see on our list is not something that you're going to see on every single closing statement. This house was a manufactured house, and because it was a manufactured house, we actually had to record that it was properly affixed to the actual land itself, and that cost $30. So whenever you buy a manufactured house, understand that you're going to have to pay an extra fee to make sure that it's properly affixed to the property. And then finally, under this, we have a small tax certification fee for $5. Moving on down to the end, we have homeowners insurance premium to the actual insurance company for 12 months for $1,668. And then lastly, the company that came out and actually certified that the foundation was good, according to FHA guidelines for manufactured houses, came to $675. So if we take all of our debits, all the things that the borrower has to pay, and you subtract it from the credits back to the borrower, the total final amount that the borrower then has to bring is $20,422.17 for a total of $213,242.34. So this $199,000 house actually cost the borrower $213,242.34. I hope now that you have more clarification on buying a house, understanding that there's a lot more involved than just that sticker price that you see on Zillow or Realtor.com. And when you're going to start shopping for a house in the future, you can plan accordingly. Maybe you can even look at this and have an idea on maybe some potential future costs that you need to bring with you. But what I would do if I were you is I would reach out to a lender and get pre-approved, obviously, and then kind of get an idea of what your costs are going to be. If you need a good lender referral partner, I have one for you. Just reach out to me. I'm definitely happy to help. Thanks so much for watching this video. Before you go, be sure to check out this video right here where I give you a real life scenario on how I actually helped a borrower get through a pretty complicated process on buying a home. It's a really cool story and I think you'll find a lot of value in it. Be sure to subscribe, like, comment, and we'll see you in a future video. Take care.